सभी का स्वागत है पहाड़ी ट्यूटर चैनल में। मैं हूं अक्षत बिस्ट। जैसे कि आपको पता है, हमने इस चैनल पे इंडियन कॉम्पिटिटिव एग्जाम के लिए एक होलिस्टिकली प्रिपरेशन स्टार्ट की है। जैसे कि आपको पता है, हमने अभी तक पॉलिटी सब्जेक्ट को रीड आउट किया है और उसके को मोस्ट ऑफ द फ्रिक्वेंटली आस्क्ड क्वेश्चंस को अटेम्प्ट किया है और अच्छे से यहाँ पे होलिस्टिकली उनको किया है। तो वैसे ही हमने अपना न्यू सब्जेक्ट इकोनॉमी स्टार्ट किया था और आज हमारी इकोनॉमी की है सिक्स्थ वीडियो, जिसमें हम टैक्सेशन सिस्टम इन इंडिया के बारे में पढ़ेंगे। सो बेसिकली टैक्स वो अमाउंट होता है, आप कह सकते हैं इट्स एन सर्विस अमाउंट, यू कैन से दैट, विच वी आर पेइंग टू गवर्नमेंट। बेसिकली दैट इज टैक्स. If a product is 10 rupees, then when you can say when a shopkeeper sell it, he will it means government apply a tax that is called GST in the product that you receive, that you consume. And that for example, जैसे एक दुकानदार के पास 10 रुपये का सामान आया, तो फिर वो उस सामान को जब एक कंज्यूमर को बेचेगा तो वो उसमें अपना पूरा टैक्स लगा के टैक्स के साथ बेचेगा, तो उसमें 5% या फिर 2% टैक्स जाएगा। पहले तो जैसे आप रेस्टोरेंट्स में जाएंगे तो वहाँ आपको टैक्स देखने के लिए मिलेगा, वहाँ पे स्पेशली मेंशन रहता है कि 2% SGST एंड 2% CGST. SGST means State Goods Service Tax and CGST means Central Goods and Service Tax. ओके, तो बट जो आपके शॉपकीपर्स जो सामान बेचता है उसमें ऑलरेडी पहले से GST लगा हुआ रहता है, इसलिए वो एक्स्ट्रा नहीं लगाता है। जैसे फ्रूटी है 10 रुपये की, तो उसमें पहले से ही GST लग चुका होगा, तब वो आपको मिल रहा होगा। ठीक है, तो वो जो एक अमाउंट रहता है जो आप उसको पे करते हो, वो एक्चुअली आप उसको नहीं कर रहे, वो GST का वो आप गवर्नमेंट को पे करते हो। इसलिए ये मत सोचना कि गवर्नमेंट जो GST वो उसके जेब में जा रहा होगा, नहीं, वो गवर्नमेंट के पास जा रहा होगा। ठीक है, सो बेसिकली देयर आर 2 टाइप्स ऑफ टैक्स इन आर इंडिया, नॉट इंडिया, इन एवरीवेयर देयर आर 2 टाइप्स ऑफ टैक्स, डायरेक्ट टैक्स एंड इनडायरेक्ट टैक्स. Direct tax are basically those tax which is which you know known as income tax, property tax, and you can say for example corporate tax, that are direct tax which is directed to government. Okay, and there is indirect tax. For example, you can say indirect tax like service tax, that is an indirect tax. Okay, GST, that is also an indirect tax which is not you don't see. क्या आप कभी फ्रूटी के लिए अलग से GST पे करते हैं? नहीं करते हैं ना, तो क्या वो उसी में इंक्लूडेड रहता है। और एक और बात, जो इनडायरेक्ट टैक्स रहता है वो ऐसा कोई स्पेसिफिक नहीं है कि जो उसको कंज्यूम करेगा उस प्रोडक्ट को वही उस टैक्स को देगा, उसको उस टैक्स को कोई भी पे कर सकता है। जैसे मैंने फ्रूटी खरीदी, बट मैंने वो फ्रूटी अपने भाई के लिए खरीदी, तो मेरा भाई उस टैक्स को पे नहीं करेगा, मैं उस टैक्स को पे कर रहा हूँ। बट इनडायरेक्ट टैक्स में आपके पास जो इंडिविजुअल उसको, मतलब उसमें क्या बोल सकते हैं हम, जैसे यू कैन से दैट डील कर रहा होगा उस पर्टिकुलर सर्विस के लिए, उस पर्टिकुलर थिंग के लिए, वो ही उसको टैक्स पे करेगा। जैसे किसी के अकाउंट में सैलरी आती है, किसी का जो कोई इंडिविजुअल अर्न कर रहा है, तो बेसिकली ऐसा नहीं हुआ कि अगर मैं अर्न कर रहा हूँ तो मेरे बदले मेरा भाई मेरा टैक्स भरेगा। नहीं, जो अर्न कर रहा है वही टैक्स भरेगा, जो प्रॉपर्टी खरीद रहा है वही उस प्रॉपर्टी का टैक्स देगा। ऐसे नहीं है कि अब ये प्रॉपर्टी मैंने खरीदी तो इसका टैक्स वो ओनर देगा, वो कोई दूसरा ओनर देगा, ये देगा वो देगा, नहीं, जो उस चीज़ को कर रहा होगा वही उसका टैक्स देगा। ये होता है डायरेक्ट टैक्स में। ओके, सो एंड जो टैक्सेशंस हैं हमने उनको फर्दर मोर क्लासिफाई किया है 3 फॉर्म्स में। लेट मी चेंज द कलर ऑफ द पेन। 3 मेथड्स में 3 तरीके के टैक्सेशन होते हैं बेसिकली। फर्स्ट इज रिग्रेसिव टैक्सेशन। बेसिकली रिग्रेसिव टैक्सेशन में, फॉर एन एग्जाम्पल, इफ योर इनकम इज हाई, then you have to pay less tax, and If your income is low, you have to pay more tax. That is regressive taxation. Now, progressive taxation, when your income is high, you have to pay more income and more tax, and when your income is low, you have to pay less tax. Okay. Now, our proportional taxation. Proportional taxation is that in which if you are earning high or whether you are earning high, you have to pay same tax. That is proportional taxation. Okay, just that's it. That's simple. Progressive taxation is a tax that impose a lower tax rate, lower income compared to those who have higher income, make it based on taxpayer ability to pay. That it means it takes larger percentage from the higher income than it does from lower individual. Basically, most of the people don't like progressive taxation because they say we are earning this much of money and why would we pay such a big amount of tax. Are you getting my point? So that they don't like that progressive taxation, but it is good for the lower middle class and middle classes. Okay. Indian income tax is typically example of progressive tax. In India, we have progressive taxation. Okay. The idea here is less tax on the people who earns less and higher tax on the people who earns more. Okay. This is the most popular taxation method in the world and populist one. Most of the countries using the progressive taxation systems. Okay. Now, regressive taxation. A regressive taxation is a tax applied uniformly, taking a large percentage of income from low earners and then the high income earners. It is opposite to a progressive tax. But basically, regressive is the opposite, in which higher class pay less tax and lower class pay more tax. Okay. Now, proportional taxation, in which both are paying similar tax. Okay. A proportional tax system, also referred to a flat tax system, access same tax rate on everyone regardlessly of income or wealth. It means it doesn't depend on your income whether what amount of tax you have to pay. You have to pay same amount whether you have a high income, whether you have or you have low income. You have to pay same. Okay. Now, taxation India. Taxation India comes in Article 256. Article 256 of Indian Constitution that takes no tax shall be levied on collected except by authority law. Basically, Article 256 basically state that no individual have authority to take a tax from anyone. Just law have authority to take tax. Law means government. Okay. Hence, each and every tax that is collected needs to be backed by accompanying law. A taxation system in India is such that the taxes are levied and collected by the central government and the state government. Some minor taxes are also levied and collected by the local authorities such as municipality. But there is an entertainment tax which is not collected by a state government or central government. It is collected by local government. That is exempt from this. Okay. Major tax, central tax. There is a list of major central tax, that is income tax, central goods and service tax, integrated good and service tax, custom duties, corporate tax and gift tax. Now, some major state tax, state and goods service tax, stamp duty and registration, professional tax. Now, local body tax, which is collected by a panchayat or municipalities. Property tax, water tax. The tax structure in India is divided into direct and indirect taxes. Okay, remember this. Now, we will learn about direct tax. A direct tax is referred to an tax levied on one person's income or wealth paid directly to the government. The burden of the such tax cannot be shifted, as I already taught you. Okay, burden of direct tax cannot be transferred. If an individual earning something, he have to pay for that. as just like income tax or property tax. If an individual buying a property, he have to pay that property tax. No other will allow to pay that tax. Okay. Now, the tax is a progressive in nature. It is levied according to the paying capacity of a person. The tax is collected more from the rich and less from the poor people. That's an important or beneficial point of progressive tax, and also a beneficial point of direct tax. Remember this. The plan and policies of the direct tax are being recommended by Central Board of Direct Taxes, CBDT, which is come under Ministry of Finance, Government of India. Okay. All the policies related to direct tax are made by CBDT, Central Board of Direct Taxes, which is regulated by Ministry of Finance. And who is our finance minister? Who is? Nirmala Sitharaman, and she is also a first finance minister of India. Okay. Merits of direct tax. It means what are the advantages of direct tax? Direct taxes are progressive. So rate of taxes varies according to tax base. For example, income tax satisfy the canon of equity. It just is basically like that. Progressive tax. I'm saying that if a poor means a poor income person have to pay less tax, and higher income person have to pay more tax. That's one of the most beneficial point of this tax. Okay. The cost of collection of direct tax is relatively low. The taxpayer pay the tax directly to state. The direct taxes also satisfy the canon of elasticity. Income tax is an income elastic in nature. As income level increase, the tax revenue of the government also increase. This is a benefit, provide benefit to government also, that if a person's income is increasing, then he have to pay more tax, and he give to the more tax he have to give to the government, and it may a government also getting benefit from it. Direct tax helps to control the inflation. This is also helps to control inflation. Just like if there is inflation, if government increase our tax, automatically inflation balanced. Okay. Demerits. Direct tax adversely affected productivity. Citizens are not willing to earn more income because that some citizen thinks that if we earn more, then we have to pay more tax. Then they do some special. They find loopholes in the taxation system, and that's called black money. So that they can run off from tax. The burden of direct tax is so heavy that the taxpayer always try to evade tax. This is lead to generation black money, which is harmful for economy. Okay. Now, indirect tax. Indirect tax is referred to a tax charge on the person who purchased the good and service. It is paid indirectly to government. The burden of tax can be easily shifted to another person. It lies on all person equally, whether rich or poor. Indirect tax are it is in nature like that. It is same for poor and rich. They have to pay equal amount of indirect tax for a good or for a service. In this, there is no partiality. Oh, you are rich, you have to pay more, you have to pay less. Oh, you are poor, you have to pay more, you have to pay less. No. In this, we have to pay similar amount of tax. And that tax is directly stated to government or central government or state government. Okay. And it is burden of this can be transferred. As I told you an example that I am buying a fruity for my brother, and I have to pay that tax. My brother don't have to pay that tax. Okay. Merits of indirect tax. All the consumers, whether they are rich or poor, have to pay indirect tax. For a reason, it is said to be indirect tax can cover more people than direct tax. The government impose indirect tax on those commodities which are harmful to health. One of the main feature of this tax is government authorities put more tax on the harmful things. just like tobacco, alcohol, no alcohol, no liquor. Okay, indirect taxes, they are known as sin taxes. Demerits of indirect taxes. Now we will learn about demerits. Okay, indirect taxes are sometimes unjust and regressive in nature, since both rich and poor person have to pay same amount of irrespective. You can say that it is not good for poor people that he have to pay same amount as richer peoples. That's also cons, but in some aspects it is also good. Indirect taxes are less elastic compared to direct tax, as indirect taxes are generally proportional. Okay, now we will learn about GST, which comes under article 279A. Okay, and we make GST council by 101 amendment. Okay, GST is an indirect tax. It comprised of many taxes like excise duty, state or custom duties. There are lots of tax. They combined it together and make GST, so that they have to do. They don't have to. There is no burden of that. We have to pay this tax, those tax. They just बेसिकली उन्होंने सारे टैक्स को मिला के एक टैक्स बनाया जिसका नाम है GST, गुड्स एंड सर्विस टैक्स. इसमें सारे टैक्स आ जाते हैं. ओके, उसके बारे में आगे पढ़ेंगे, अभी वेट करो. GST is a indirect tax which is replaced by many indirect tax in India. GST is one of the indirect tax of entire country. The goods and service tax were passed in Parliament 29th March 2017. The act came into effect 1st July 2017. The motto is one nation, one market and one tax. Remember this. This line is most important line. One nation, one market, one tax. The government and service tax in India is comprehensively multi-stage destination-based tax that is levied on every value addition. Now I will teach you about what is destination-based tax. If one product, for example, एक प्रोडक्ट है वो आसाम में मैन्युफैक्चर हुआ है, ठीक है, और हमें उसको बेचने के लिए हम लाए हैं उसको उत्तराखंड में, तो जो उसका पूरा टैक्स, जो उसका उत्तराखंड में उसका अलग टैक्स होगा, ठीक है, और आसाम में उस प्रोडक्ट का अलग टैक्स पड़ा होगा क्योंकि वो आसाम गवर्नमेंट के SGST में आता होगा, और जब ये उत्तराखंड आया है तो वह उत्तराखंड के SGST में, और सबका अमाउंट, सबका टैक्स अमाउंट अलग होता है, ये रिमेंबर करना, ठीक है. GST is one of the biggest indirect tax reforms in country. ठीक है, destination based. GST is destination based tax. For example, consider a good manufactured in Telangana and sold in final consumers in Karnataka. Since the good and GST is levied at the point of consumption, in the case Karnataka, the entire tax will be go to Karnataka and not Telangana. ओके, और जो उसका जो टैक्स का अमाउंट होगा, अगर वो मैन्युफैक्चर तेलंगाना में हो रहा पर वो बिक अगर उत्तराखंड में रह रहा है, तो जो टैक्स का अमाउंट होगा जो हम उसको पे कर रहे होंगे उस पे अमाउंट, वो तेलंगाना की गवर्नमेंट पे नहीं जाएगा, वो जाएगा उत्तराखंड की गवर्नमेंट पे. ये रिमेंबर करना, ठीक है. Components of GST. Component of GST are three types of CGST, SGST and IGST. CGST, Central Goods and Service Tax, State Goods and Service Tax, Integrated Goods and Service Tax. CGST collected by central government, SGST collected by state government, and IGST is collected by central government. Okay, also now you can see that which tax are coming in our GST: value added tax, central excise duties, central tax, excise duty, service tax comes in GST. Okay, just go through this. Okay. That's not that important, but just read and go through it. Okay. Other important details of GST: alcoholic liquor for human consumption and petroleum products. We don't put GST on alcoholic liquors for human consumption and petroleum products and electricity also. Okay, there are different tax for them. Single tax is replaced by multiply levies right for manufacturers supplies to consumers. The GST incorporates many of indirect taxes levied by states, central and governments. The state, some which I am also saying that which are the tax which comes in GST, that is state VAT or sale tax. VAT means value added tax, central sales tax, purchase tax, luxury tax, entertainment and amusement tax, central excise duty, service duty, additional duties for customs, additional duties of excise, and tax on advertisement. These all taxes are comes in GST. Okay. Now current GST, now there are different slabs of for GST. फॉर इट मीन्स हर एक अमाउंट एक पर्टिकुलर अमाउंट सेट कर दिया गया है कि इसके लिए इस प्रोडक्ट या फिर प्रोडक्ट के लिए इतना जीएसटी लगेगा इन एक दे पुट सेंट्रल गवर्नमेंट जस्ट make a categories of products in which they implemented different types of GST. They implemented 4 or 5 slabs for there is 0% tax, 8% tax, 18%, and 5%, 12%, 18%, 28%. Okay, there are different type of slabs. Basically 7 slabs. Okay, first 0% GST is 0.25% GST, 3% GST, 5% GST, 12% GST, 18% GST, and 28% GST. Okay. Now advantage of GST: removing cascading effects. Cascading effect basically means the various types of taxes, so that government don't have any burden of that. We have to just for उनको मतलब प्रॉपर ढंग से संभालने के लिए हमने एक पर्टिकुलर सिर्फ एक सिंगल टैक्स लाया GST, सो दैट किसी को भी दिक्कत ना हो, अथॉरिटीज को भी दिक्कत ना हो टैक्स को इंप्लीमेंट करते टाइम. बेसिकली सिंगल पॉइंट टैक्स, रेगुलेटिंग द अनऑर्गेनाइज्ड सेक्टर, ऑनलाइन सिंपलर प्रोड्यूसर अंडर GST, increase efficiency in logistics. Okay, now we will learn about public financing. Public financing basically study होती है. Public financing is an economic activities in which we will learn about expenditure of government and earning of government. That is public finance. Okay, now we will know about public finance in India. Now there is an budget. First read this. Okay, public finance get the reference in the ancient territories Arthashastra of Kautilya's, which cover treasury. We take idea of public finance from Arthashastra of Kautilya's. Remember this. Okay, now we will learn about budget. Budget which comes in article 112. I already taught you in polity about article 112. It is not called budget, it is called state annual financial statement. That is in our informal language, that is called budget. Budget is basically that in which it is a report and mention of government expenditure and government earning. Basically that is budget. Just make it simple and be it simple. Okay, budget is an annual financial statement which show the estimate income and expenditure of government for a forthcoming financial year. Forthcoming मतलब आने वाले साल के लिए. Okay, India is a federal economy. Hence federal economy means where there are dual governments, state government and union governments. Okay, here hence public budget is divided into 2 layers of government. According to Indian constitution, the central government has put submit annual financial statement, union budget under article 112 to the parliament, and each state government had to submit the same statement legislative assembly under article. For central government, for union there is an article 112, and for state there is an article 202. Okay, remember this. Now government budgets. Basically government budgets are further divided into 2 parts: revenue budget and capital budget. Revenue budget is that in which there is an everyday recurring expense of government that comes in revenue budget. Basically it consists of subsidies and salaries. That's in recurring and everyday expense of government that comes in revenue budget. Now capital budget. Capital budget are those budget are investment of government for long terms that comes in capital budget. Just remember this. Now further, revenue budget also categorized in two parts: revenue receipts and revenue expenditure. Basically, revenue receipts are total earning of government, that comes in revenue receipts, and revenue expenditure total expense of government that comes in revenue expenditure. Now, and also revenue receipts also comes further categorized in two parts: tax revenue and non-tax revenue. Tax revenue are tax revenue and non-tax revenue. Okay, now revenue expenditure also further classified into two parts: plan revenue expenditure and non-plan revenue expenditure. Okay, now capital budget, okay, long-term investment of governments, also further divided into two parts: capital receipt and capital expenditure. Capital receipts are those which either creates liabilities or reduce asset. Capital receipt just for example, government taking loans and losing its assets. मतलब he have to, वो गवर्नमेंट अगर लोन लेती है और अगर वो लोन लेगी तो उसको कुछ ना कुछ मॉर्टिगेज तो करना पड़ेगा, कोलैटरल तो देना पड़ेगा, तो वो अपने कुछ गवर्नमेंट सिक्योरिटीज़ को दे देती है, तो वो अपना एसेट्स लूज़ कर रही है बट और अपने ऊपर लाइबिलिटीज़ ले रही है, मतलब लोन ले रही है, तो वो आपका कैपिटल रिसीप्ट्स में आता है. ठीक है. Now capital expenditure. Capital expenditure are those investments which give you benefit in futures, just like infrastructure, equipments and plants. Okay. Further, capital expenditure also divided into two parts: planned capital expenditure and non-planned capital expenditure. Now we will learn about, just go through with this, just read out, and I already explained you what are these. That's insufficient. You don't have to go and master in these all. Just take small knowledge about everything. Okay. Now we will learn about revenue expenditure. Okay, revenue expenditure is expenditure incurred by a purpose than other the creation of physical and financial assets of government. It relates to those expenses incurred from the normal functioning of the government departments and various service. Interest payment on debt incurred by government and grants give state and other parties. Okay, the budget document classify total expenditure into plan and non-plan expenditure. The plan expenditure related to the central plans, the 5-year plans, and the central assistance of statement and union territories. The non-revenue expenditure, the more important component of revenue expenditure, covers vast range of general, economic, and social service of government. Basically, revenue expenditure is just like that expense of government, which expense government doing. That comes in revenue expenditure. Okay. Now capital receipts. All the non-revenue receipts of government is known as capital receipts. Just means either capital receipts or creating liabilities or reducing asset. As I explained you in previous lines. Okay, previous slide, that you are taking loan, you getting liabilities, and you have to give some collateral, that reducing your asset. That is comes in capital receipt. Okay. Now capital expenditure. There are expenditure of government which result to creation of physical and financial asset or reduction in financial liabilities. This includes expenditure on acquisition of land, building, machinery, equipment, investment in shares, and loan advance by the central government to state and union territories, government, PSUs, and other parties. Capital expenditure also categorized in two parts: planned and non-planned budgets. Okay. Now we will learn about balanced and surplus deficit budget. Okay, balanced budget basically means when there is an equal amount, equal in expense and earning of government, then there is a balanced budget. Okay. Now surplus budget means when earning is high and expense is low. then that you have surplus budget. And deficit budget is that when you have earning is very low but your expense is very high, then there is deficit budget. Okay. Now we will learn about budgetary deficit. When a government spend more than its collect by the of revenue, it incurs a budget deficit. In reference to Indian government budget, the budget deficit of four major types: revenue deficit, budget deficit, fiscal deficit, and primary deficit. Okay. First, we will learn about revenue deficit. Revenue deficit is that when revenue expenditure is more, it means expense is high but income is low, then that is called revenue deficit. And now budget deficit. Budget deficit is that when the total expenditure is less than total revenue, then there is a budget deficit. Okay. Now primary deficit. A primary deficit is equal to the fiscal deficit minus interest payment. Okay, fiscal deficit means when government earning is low and expenditure high, that is called fiscal deficit. And when you are minusing interest from fiscal deficit, then it is called a primary deficit. Now fiscal deficit, difference between government total expenditure and total receipts excluding borrowing, okay, or interest payments. Fiscal policies. Fiscal policies are those policies which are implemented by a central government to tackle inflation, and monetary policy are those policies which are implemented by a central bank to tackle inflation. Okay. As you know, monetary policies are repo rate, reverse repo rate, bank rate, credit ratio, credit reserve ratio, statutory liquidity rate. Those all are monetary policies. Now some fiscal instrument. Government can implement high tax to tackle inflation. Public expenditure, he can put some action to about public expenditure. Public debt, they do not clear the debts of public. Some fiscal policies, okay. Objectives of fiscal policy, it means what are the aim of fiscal policies: full employment, price stability, economic growth, equitable distribution, external stability, and regional balance. Okay, those are the aim or goal of fiscal policies. Now we will learn about finance commission, which comes in article 280. Okay, finance commission is an constitutional body which is appointed by a president. The main work of finance commission is that distribution of money between central and state. Okay, that's a work of financial commission. He also augment the India's consolidated fund. Okay, but he do not manage. The duty of managing the India's consolidated fund is Comptroller Auditor General of India. Finance Commission is quasi-judicial body set under Article 280 of Indian Constitution. It was established in year 1951 to define a fiscal relationship framework between central and state. Okay. Now, what is important is the appointment is done by president. Just remember this. Okay. So just go through with this all details, and that's enough for you. Just you have to remember the work of finance commission and remember in which article it comes. Okay. And external sector in India. Now we will learn about external sector in India. External sector in India, it basically means economical activities related to foreign currency comes in external sector of India. Just like you are doing import and export or foreign investment, that all comes in external trade. Okay, just for example, I'm buying a car from America, that comes in external trade. Or I'm doing, or I'm investing a money in a market of America, then it is also comes in external trade. Now trade, just trade means exchanging of goods, that is trade. Make it simple. Okay, the balance of payment. Balance of payment, I already taught you about the balance of payment. Balance of payment means, balance of payment means transaction, or you can say report of foreign trade or individual doing trade with other country, that all reports comes in balance of trade. Okay, now balance of trade have two components, or you can say two types of account: current account and capital account. Current accounts basically gather information of current trade, or day by day trade, that all the information related to the current trade or current trade and day by day trade comes in current accounts. Okay, current account is hold the trade in goods, in services, and transfer of payment by on the basis of on daily basis. Okay, just go through with this. This is not that important, but you have to remember current accounts holds a data of day-to-day transactions. Now current account basically holds and data of two long term, or you can say long term investment. As for example, a government taking loan from other country, and that interest paying thing, or that interest paying process comes in current account. Okay, that's simple. Long term payments comes in current account, and day to day a daily payment comes in current account. Current account and capital account. Okay, where is capital account? कहाँ गया? Oh, sorry. बैलेंस ऑफ ट्रेड तो मैं आपको पहले ही पढ़ा चुका हूँ कि जो एक्सपोर्ट और इंपोर्ट और कुछ भी, मतलब जो हम फॉरेन से कुछ भी हम डील्स वगैरह करते हैं, एक इंडिविजुअल या किसी भी कंट्री से करेगा वो, तो उसकी जो रिपोर्ट्स होगी वो सारी बैलेंस ऑफ पेमेंट के अंदर आती है, ठीक है, और बैलेंस ऑफ ट्रेड के अंदर आती है, ठीक है। नाउ कैपिटल अकाउंट बेसिकली लॉन्ग टर्म प्रोसेस ऑफ पेमेंट को बोला जाता है। जैसे कि एक कंट्री ने एक दूसरी कंट्री से लोन लिया, तो वो जो लोन रीपेमेंट और लोन पेमेंट की वापस रीपेमेंट और रीइंबर्समेंट जो अमाउंट होगा, उसकी जो प्रोसेस होगी, उसको कैपिटल अकाउंट बोलते हैं बेसिकली। ओके, उस प्रोसेस को फाइनेंशियल ट्रांजैक्शन कंसिस्टिंग ऑफ डायरेक्ट इन्वेस्टमेंट और परचेज ऑफ इंटरेस्ट बेयरिंग financial instruments, non-interest bearing demand deposit and gold fall under the capital account. The capital account record all the international transaction of asset in any one of the form in which wealth can held. For example, money, stock, bonds, government debts. किसी भी फॉर्म में हो सकता है वो, मनी, स्टॉक, बॉन्ड्स और गवर्नमेंट डेब्ट्स जो हम रीइंबर्समेंट करेंगे बेसिकली। ओके, सो दैट्स ऑल फॉर टुडे। नाउ further we will learn in next class. Thank you.